So we talked a little bit about yesterday being overextended, looking to see if we could fail in the 275 area. We did right on the open, came back the 80 cents. We made the new high, then quickly got back down below 275. So if you wanted to kind of get short yesterday in anticipation of that, $2 to $4 pullback, it gave you the setup, especially after 2 o'clock. We made the new high, had the hard down bar below 275. I think popped up there right at the end of the day before quickly selling off 50 cents into the close and then drifting down lower. Now it's gapping lower this morning, and so that's kind of why you would at least buy some puts short a little bit into the close. If you haven't done that yet, we want to still think about a pullback to, let's see, the high was 275, so 272, 272 and a half, this area here, and then we'll kind of see what happens. You want to short a little bit of a pop above 274. So it'd be something like the morning support from yesterday, 274. 20, 274.15, 274.20. So again, if you look at it, it's first is the down bar below 275, tests a couple of times, then the hard down bar into the close. We come in this morning, that's already been down at 273, which is over $2 from yesterday's high. So there's probably some people tripping over each other, buying it down here near yesterday's pre-market and open support. But we want to see a little bit of a pop here, get the risk reward more favorable. So you start shorting into this, and there's not that much more downside unless you're a very short-term momentum trader. Shorting into here for a move to here, it's not such a good risk to reward. But shorting here, where you can be short against this area right here, this is pretty good. So that's still a good risk to reward. And again, there's always the possibility you might get a deeper pullback, not like a major market pullback, but maybe something a little bit deeper. Get some get a little downtrend going, get some lower highs. Maybe we'll get something down to this area here. But certainly not much more than that, based on anything we've seen. Just short-term overbought. So IWM, right? So IWM was different because this one wasn't continually making new highs. It was just having trouble closing above 175. Yesterday we gapped above, we came below, we did the retest of the morning high, we closed below again. And we're just gapping down to the support area for the last week or so. So in this case, I would continue to trade it the same way we've been trading it for the last week. Flush is below 174, you're buying, and you're looking for failures up in this area right here. All right, so SVU. Okay, so the numbers were solid there, but the guidance was weak, so I guess that's why we're getting our gap down. And we already were involved. It had the hard down move here, double bottom down in 14.5, so it's rallied up quite a bit. So that's your main probably reason for it to come down. So let's take a look at the size of this move here. So it's 1470, 27. It's about a 50% move off the low. $7, 350. Okay. So about half of this up move retracement probably puts it right here. What I put for support, 17.5, 18. So to me, it's already pretty big. It's already a pretty big pullback. I would think this would be a decent buying zone. I guess we'll see what happens right on the open. But if it's supporting in this area here, 1740, 1750, and then gets back above 18, I'd be playing it to like 1850 to 1875 right here. And then I kind of want to see if I want to push it a little bit more, 1940, 1950. What did I put on the sheet? I put 1960. So it's probably when I zoomed in this area right here, 1960. It's pretty good. That would be for a bigger bounce. So it's only done 19,000 shares, so we're not going to get a lot of information on it. zooming in. All right, let's move on to the next thing. SIG. So SIG, let's go to 30-minute. Right, so they warned, or they they warned, I guess. And they crushed it down to the low 50s. I think we were looking for a bounce against 50. It came down and tested 50, came down to 50 again. It's a pretty good bounce. Got back above 58. They announced same-store sales. So a lot of these retail names the last few days are reporting same-store sales from December. These guys were actually down a few percent. Looks like it's already bounced from 53, 52, 53. What do we put on for sport here? I put 53, 54. So let's just zoom in and see what it did. All right, so what do we have for resistance? So it's already had the bounce, almost. First real resistance yesterday is support. I put 56.5, but 56.30 is kind of the low rate here. So if they can get this to zip right up here above 56 and some sellers come in, we could look for maybe a move back down to 54-ish. But this was kind of the buy zone or potential buy zone. It's already bounced from there. $270,000 shares. So same sort of sales down 3%. Probably wasn't viewed as that bad. It had already gapped down from $80 to, or I should say 76, down to like the mid 50s. But this is kind of the range I'd be using for the open. This right here. Sellers could definitely step in on yesterday's support. And then Lennar, LEN, the numbers were weak, but the year-over-year growth numbers are really strong. It's probably why this one's already bounced a few dollars. So again, the best play in a secular bull market is when things aren't that bad in terms of numbers and something gaps lower, looking to buy it. Just like we saw in Kohl's a couple of days ago, Target. You want to buy things on gap down that aren't like missing numbers and lowering guidance. And even those sometimes, if they've already been beaten down over the prior couple of quarters, those will be good bounce candidates as well. Not pretty short, unless something's run up quite a bit already. So looking at LEN was definitely trending in coming into this quarter's earnings. Had broken out 2 weeks ago above 64. So this would have been the area to look for a potential bounce. And it's already done that. So let's zoom in a little bit. What do we have for resistance? 66.5, 67. So we're almost there. So that's the first thing I'm going to be looking for. Can it get back inside of this range from the last few days and hold inside of it? If it can hold inside of it after 10 o'clock, it's still up here and starts to move higher, you want to play the breakout. But the first thing I'll look for is a failure at the bottom of this range. Right here. I'm playing this. This is the range. Okay, so that was the fresh stuff. I want to go to OSTK first. So OSTK, should have been watching more closely yesterday. This thing just had a huge run up. I think it got some upgrades and stuff, and it run up from, similar to Alibaba. It went from like not similar fundamentals. Alibaba actually has really good fundamentals. But took out the high, just had a very big run over a few days, similar to the market actually. And then started to look like maybe a couple of days ago was going to sell off. It gapped up to 86, sold off hard to 80, and came and made a new high. You should keep this setup in mind. So something's run up a bunch, gets a quick hard down move on the open, then makes a new high, holds up there. But now you have kind of the high here is 90. You have this level here, 86, which has been 86.5, which has been the prior high here, failed on the open this day, was afternoon support. You want to have alerts kind of below that level, starting at that level, then a 50 cents lower, a dollar lower, because you have downside. If it fails up here, you have downside targets of kind of here and here. And yesterday it hit this first one. I think this morning it's threatening the second one. But that's kind of the idea when something's overdone. A lot of times people will get short here, then they'll aggressively reshort this retracement, and then they get stopped out above 86.70 or 80, and then stop looking. So they're like, oh, it's at the highs. But in the markets, when you're looking for a pullback in the market, and you have a level to trade against, at the next day it's kind of, oh, it can't get back up to the high. It's holding here, it's holding here, it's holding here. And then you get the quick down move below 86.50. That's something you could look at, and it takes out the opening low. That's something you pile in on, and then you can see the momentum. This momentum, people were waiting for it. They piled in, it went down through the prior day's low. It's gapping down this morning. So that's why I wanted to talk about that a little bit. And you get these every couple of months. So this morning, we want to look to see if it can pop back up into this area right here, 81. Did I put it on the sheet? What did I put on the sheet? Yep, 81.5, 82. So you want to see if you can get in here on the short side and then capture that move down, all the way back down to where it starts from. And then you'll kind of see. Sometimes it'll go much lower, like SQ a few weeks ago when it started to sell off. Sometimes it will just hold here and continue to kind of, it'll get back down here and then get back into the low 80s. Kodak. So Kodak, this is a tough one for us. The firm has a massive short position in it right now, so I don't even think I'll be able to get played on the short side. I don't think I can get any more shares. But this is one, like we've been talking about this for about a month or two. It's different than in the terms of the low floats where we short, where there's nothing there. Now you get the retail people involved in this blockchain crypto madness, and everyone, even older people remember Kodak, right? Kodak business, and obviously it shouldn't be really up this much, but they look at the chart and they're like, oh, Kodak, we know Kodak, they're in the picture business, blah, blah, blah. And, they look at this chart here and they're like, well, it was $15, $17 a year ago. Maybe it's going to go back to $15, $17. Price, maybe it'll go to $20. It's, there's no fundamental reason for it, but we've been seeing, the moves in Riot, first to 20, then pulls back to $12, then goes to 40, and a few other ones. And so that's kind of the deal there. And, the entire float is probably short, so people are going to get squeezed. We can see already in the pre-market it failed at 11.5. I'm sorry, for guys people on the desk got long yesterday. Some people took it out long. They were rewarded with a $3 gap up in the after hours, then another $3 this morning. But one trader is massively short. So let's look at this technically. Technically, $10 is going to be kind of people are going to be looking to buy this into $10 this morning. If it ever cracks 10, comes in, to 9:30, something like that, comes back up, and fails at 10, then you'd be looking for a move to like 8 or something like that. That's the first thing. Now, if it can't even test $10 and just comes into like the high 10s, maybe 11, and then takes out the high here after a couple hours this morning, could be looking at $14, $15 a share. It's going to be extremely liquid probably. Yesterday it traded 70 million shares, so it's going to be extremely liquid. Then Aaron saying MRH. So did they say? I'm assuming they said some sort of blockchain something. Yes. They say they're going to widen service offerings with blockchain functionality. And so this one, I don't know, Aaron, if you tried to locate it on the short side as well, if their shares available. I don't know what the float is on this. But yeah, hey. This was $1 stock a few days ago. It is now $8.75. Let's see what we got here. Shark is long a little bit. I guess he's as a feeler, but let's go to the pre-market. This looks very clean in the pre-market on the long side. So it's already done 1.3 million shares. Normally does a couple 100,000. So whatever the float is, I imagine it's probably very small, under 5 million shares. Yeah, well, I'm going to try to locate some shares on this. But yeah, these are the two stocks, KODK and AMRH, the low floaters. There'll be some opportunities in the first three I talked about, but definitely the volume is going to be in AMRH and KODK.
Hope you enjoyed that video. You can actually watch that video if you're subscribed to our Trader 90 before the market even opens. What stocks are in play? What levels in those stocks are important? And how we might go about attacking that stock. That's Steve Spencer, 20-year veteran trader, laying it out there every morning before the market even opens. A really, really powerful tool to start your session off on the right foot. So right now we're offering a trial that you can take advantage of to access this meeting and other meetings throughout the day. We have a meeting at 11 a.m. Eastern where you can sit down with Mike Bellafiore and listen to him talk about what's going on during the morning session, what stocks were in play, what the best trade opportunities were, as well as maybe some things that we're looking at heading into the afternoon session. So I really encourage you to take advantage of that trial.